The story of UPI did not begin with an app, but with an idea. How could India, a country of more than a billion people, leapfrog traditional banking and move straight into the digital era? The answer lay in what policymakers later called digital public infrastructure. The Unified Payments Interface (UPI) has transformed the digital payments market in India in ways that have outpaced many seasoned banking systems, especially when compared to the banking system in the United States. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dialani. Now, all over the world, governments, businesses, and people have been ditching cash for digital payment solutions. In the US, we say the rise of PayPal, followed by numerous additions like Venmo and now Zelle, backed by large US banks. But India's UPI is a trailblazer in bringing the digital transformation to the masses in a standardized and cost effective manner. Let's welcome Shivam Shah, founder of Piston, to help us understand how India's UPI reshaped digital payments and the lessons it holds for transforming B2B transactions in the US market. Hi Shivam, how are you doing?
Hi, Priya. Great. Thank you for having me.
Great. It's a pleasure to have you on a podcast today. And definitely, I think when we are talking about India's UPI system, there are so many things to learn from it. And of course, we are going to hear insights from your end as to how this entire system can be implemented or replicated in the US market, specifically in the logistics and transportation industry. But before we dive deeper into our conversation, we would like to know more about Piston. So, if you could help us understand more about the company, its specialization, it would be great.
No, absolutely. So, at Piston, what we're building is we're building the new age payment network for B2B payments here in the US. And that sounds like a very broad, vague sort of company mission, but it started a lot narrower, right? So Piston started by me and my co-founder, Vikram. We both were fleet owners ourselves, and we were both spending millions of dollars every year on fuel payments. For any logistics company, after salaries, fuel is the largest expense, and it's about 26% of our revenue. However, every logistics company has no control on their fuel spend, and they're inundated by high levels of user fraud, and they have to pay retail prices. So what you and I pay to fill up our cars is the same that's paid by these logistics companies spending millions of dollars. And then Vikram and I wanted to change that fundamentally. So we thought, hey, let's launch another credit card program with a little bit more data to solve these issues. And that's what we set out to do for 7 to 9 months. However, during that journey of understanding how traditional payment networks work in the US, we were just it was very eye opening. And we saw there's significant inefficiencies built into these very legacy systems like Visa and MasterCard. Now, I had spent all my formative years in India. I've seen, wallets and then UPI really reshape our digital payment networks. And I could not understand. I was just scratching my head on why this did not exist here in the US. And, getting heavily inspired by my experience, that's how we, launched Piston. We're essentially building a payment network layer where we're working with currently fuel providers all over the US. And we're building the Piston network where they accept Piston as a payment method. And on the other side, we're working with logistics companies, fueling their fuel expenses. That's a nutshell of what Piston does today. And as we grow, we're hoping to, cover all business B2B payments here in the US.
Great. Thank you for that wonderful overview, Shivam. And it's really great to understand how Piston is making an impact in the overall fleet industry or probably, the logistics industry. It's really fascinating to see how your particular specialization aligns with the evolving needs of today's tech-driven world. Let's dive a little deeper into your journey, Shivam. You have been driving innovation at the intersection of logistics, tech, and infrastructure, and focusing on solving a real world operational gaps with scalable solutions. So, we would be really happy to know more about you. How has your journey been till date, and what exactly is your role and contribution towards the company?
No, thank you. So my journey has been the most unlikely journey of a fintech entrepreneur here in the US. While I studied here in the US, I went back to India, spent 10 years there. helping my father run his family business. But on the side, I was always very, very interested in new technologies and startups. And that's what, 20% of my time kind of went into investing in startups, building small robo-advisory platforms, e-commerce companies, and the likes. And that's what kept me going. COVID came, and I think most of us kind of relooked at our life, our priorities, and the direction we were headed. And I wasn't excited about mine. And that's why I made this pretty abrupt shift where I moved to the US right in the middle of the second wave of COVID. Everything was pretty much shut down. But I said, hey, let me give this a new shot of, let me reshape kind of the trajectory. I landed in Atlanta where my brother-in-law had a logistics company. I didn't know anything about logistics, but I knew I'm like, hey, seems like a good opportunity. Let's get into this. And that's how I, became a part of his logistics operations. I very quickly understood there's significant inefficiencies in this industry, and I would probably be better positioned to serve the industry rather than being a part of the industry directly. And that's what got me to start my previous company called Ansel Services. We built one of the largest technology-enabled recruiting platforms in the US. We work with thousands of business owners all across the US, helping them recruit truck drivers, essentially. Spent 2 years building that business, scaled it up to over $4 million in ARR. And, as a result, I was introduced to hundreds of logistics companies, got a very, very deep understanding of the business and the problems. That's why my co-founder, Vikram, he was one of my first few customers. He'd also built a routing platform. It was very unique, which had got acquired by a larger company. And both of us, were very intrigued and interested in how we could solve the bigger problems this industry faced. And both of us had faced fuel fraud, inefficiencies in fuel spend in our own businesses. And we both thought that that was a large problem that we wanted to tackle. And that's kind of how we founded Piston about a year and a half ago. I'm the co-founder. I run mostly operations, business development. But honestly, as a co-founder, you kind of run everything. But me and Vikram, my co-founder, split the responsibilities between ourselves. Where today, we've raised 2 rounds of funding, about $7.5 million from some of the best investors here in the US. We have a team of about 50 people. We're split in 3 geographies. Our head office is in Cupertino, in the Bay Area. Our go-to-market and customer success is in Salt Lake City, Utah, and our entire engineering team is based in Kolkata, India. That's a little bit about us.
Great. What a exciting journey, I must say. And it's always great to understand, the human side behind the innovation. And thank you for, making us a part of that journey and of course, the future growth as well as you plan out the scalability options for a Piston. Now, moving ahead and diving into our conversation, the National Payments Corporation of India, NPCI, launched the country's UPI in 2016 to serve as a real-time payments system and facilitate peer-to-peer or peer-to-merchant transactions via mobile phones. Since then, the payments infrastructure has seen massive growth, having reached its peak in December 2023, surpassing, I guess, around 12 billion transactions in one single month. And then the US launched its real time payments initiative, FedNow, I think last July, and I believe it has a lot to learn from India's UPI. So, when we talk about India's UPI, it has been nothing short of a revolution in consumer payments. What do you think are the core design principles or policy choices behind UPI's success that the US can learn from?
Yeah, no, 100%. Having seen the Indian, wallet ecosystem first built and then from there the UPI system, it was, yeah, it's absolutely revolutionary. I believe there's some key tenets of why UPI was successful that the US or any most countries struggle to reproduce, at least as of today. So I think the first one is the Indian government decided to take a slightly centralized approach to this. We created the National Payments Center, which mandated that all banks adopt UPI. I think that universal acceptance that got turned on pretty much instantaneously is a key reason why adoption was able to be driven, right? Here in the US, we have well over 4,000 banks. And the US, even though FedNow was launched, I think over a year ago, it's unable to centralize and direct these varied banks, ranging from large JP Morgan Chases to small regional banks to be able to adopt the technology. And thus, there's a sort of a network effect. If everyone is accepting and paying by a particular payment method, it drives a lot of pressure for the whole ecosystem to adopt it and build on top of it. And that's what UPI was able to unlock by, essentially mandating this. Apart from that, I believe we took a very India first approach when we built UPIs, and a very first principled approach where we built direct mobile apps. We were also at that midst, if you remember, we were going through a pretty much a mobile revolution where smartphone usage was exploding, and UPI was built on top of that, right? And that also gives tremendous surface area for apps to be built which facilitate payments, but can then use that attention span of the user to sell them other services. And that's where the economics also came up, right? That's how the Google Pays and the ATMs of the world were able to build on top of UPI, keeping UPI free, which was the core tenant and one of the big drivers that away from Visa, away from Mastercard. But at the same time, they were able to sell other services and build viable businesses around it. And we were not left to just the banks innovating, right? Because we all know, banks are large institutes and they may not have the efficiency of younger startups.
Definitely. And I think that's a great perspective that you have shared, Shivam. And it's really fascinating to see how India's approach to inclusion and innovation has really set a global benchmark in digital payments. And what's remarkable is the policy or infrastructure or innovation have kind of worked hand in hand to make what UPI what it is today. And it is setting like a global benchmark, and countries all over the world are so surprised and thrilled by this innovation that we have witnessed in the last couple of years. Now, moving ahead, when we are talking about logistics, for example, so logistics, of course, has have like different verticals and factors that we need to consider. So when we talk about the financial landscape overall, I think it is no longer confined to bank branches or dedicated apps. We are definitely witnessing a profound transformation. We are now having the rise of embedded finance, where financial services seamlessly integrate into non financial platforms, making payments, lending, and even insurance almost invisible to the end users. For business analysts, this isn't merely a technological trend, it's a fundamental paradigm shift that redefines the strategic importance and the tangible value we deliver. Now, for example, suppliers can receive instant payments upon verified delivery, which can be integrated directly into the logistics software. So when we think of logistics, we always imagine of warehouses and trucks and not payment systems. What do you mean by payments as the invisible infrastructure of logistics?
Yeah. No, thanks for that question. So I believe every business at the end of the day, comes down to the transaction of money, right? In exchange for a product or a service, a user or another business will pay money for it. And thus, the invisible backbone of any transaction or any business at the end of the day all boils down to just dollars and rupees. With logistics and specifics, it's a $1.2 trillion industry here in the US. So that alone, the logistics industry alone, is a G10 nation of its own. And what we all need to understand is industries such as logistics, while they're so large, there are a few percentage points in margins that they deliver for their business owners. And thus, with the scale of money that moves through the system, financial optimization, efficiencies in moving the money around and having key insights and analytics become all that more important for an industry as vital as logistics. So that is, kind of the realization that we had been a part of the logistics industry, that this is extremely high volume of money moving between the parts. And yet, the financial stack seems so dated and, cumbersome. People are actually losing efficiency in moving the money around.
Definitely, I think I agree with you that our financial stacks are so cumbersome and so outdated that we definitely lose efficiency when we talk about payments and moving payments. And of course, payments, which we often take for granted, actually keep the entire logistics engine running smoothly behind the scenes. So, it's fascinating to see how the financial layer quietly powers everything, whether it's a vendor settlements or driver payouts or even the cross-border transactions. So, of course, we definitely need a lot of innovations or more developments around this area in terms of making it more efficient, I would say. And also, when we're talking about financial stacks, I think for decades, financial institutions have relied on manual processes or, rule-based engines and historical data to evaluate risks or even approve loans. Although these techniques offered stability, they lacked the agility and real-time intelligence that is so much required in today's global economy's engine. And to bridge this gap, data analytics and financial services deploy AI and real-time insights to make informed decisions or improve operational efficiency and provide those hyper personalized services keeping up with the pace of the rapidly changing wealth management landscape. So what role do you think AI and data analytics play in optimizing these financial flows beyond traditional reconciliation and invoicing tools?
AI has the ability to play a profound, impact in this industry. Let me take one step back, right? So traditional, when you swipe your Visa or MasterCard credit card at any merchant, you only get two pieces of information. You get the merchant or the location it was swiped at, for example, say Shoppers Stop, and you get the dollar amount or the rupee amount, right? You get, hey, you spent 500 rupees at Shoppers Stop. That is it. That's all the context you get. And then it is upon you to realize what you bought, when you bought it, or why you bought it. That's how legacy networks have built over the decades. And that's what we at Piston saw as completely inefficient. And we're trying to change it from a very ground up, principled way. We believe that the new age payment networks need to be more contextual. They need to have a significant amount of data. For example, with fuel, when you buy fuel, one must be able to understand at the time of payment, how much fuel you bought, what grade of fuel you bought. We must know what time the pump opened and what time the fueling activity was closed. And we just need to have significantly more data to build any meaningful insight, right? Because otherwise, like you mentioned, fraud prevention at best becomes rule based. That Priya spends on average 500 rupees every transaction. So, oh, this transaction is 3,000 rupees. It's outside the norm. Let me flag this transaction. And that provides all sorts of inefficiencies, right? We start seeing unnecessary flags. Your card will get declined when you need it the most. We've all been in those situations, right? Where you're making this big purchase and your card gets declined and you're waiting for the bank to call you so you can clear the transaction. That might work as a consumer, but as a fleet owner who has hundreds of drivers all over the US transacting, that becomes an absolute nightmare, right? When the bank calls and you're trying to figure out who the driver was, why he did this. An industry like logistics is extremely dynamic. You cannot say that, okay, he should only be able to fill up till 6 p.m. Life happens. He might have a flat tire. He might be behind some, a bad traffic jam, and he might need to fill up fuel at 8 p.m. That doesn't mean that transaction can be flagged as a suspect and you block that person from using the payment method. We believe that by collecting significantly more data points, one can very hyper personalize risk scoring and risk methodology to that particular driver or that particular truck. And that's what we believe is the future of, how AI can be leveraged to drive meaningful advantage. Let me give you some numbers, right? So in this industry, they spend over $300 billion on just fuel spend every year. And well over 7% goes to friendly fraud. That friendly fraud is basically when the driver, instead of filling up his truck, he fills up his own car. So while he might still be the end user intended to use the payment method, he didn't use it for the method it was supposed to be. And that's just unacceptable. This industry has accepted that 7% fraud is fine. It's just cost of doing business. And we feel like we have a unique opportunity to build a very rich data layer that will allow us to significantly reduce this fraudulent activity.
Absolutely, Shivam. And when we talk about AI and advanced analytics, I think it goes beyond streamlining financial operations. It helps us in uncovering patterns and insights that were previously hidden in the data. And it really shows how the finance function is evolving from being purely transactional to becoming a more strategic driver of business intelligence. So I think that's where, the key is that businesses must adapt and develop to be competitive in an increasingly digitized and connected environment. And I think the logistics industry is no different. The introduction of application programming interface, the APIs, it has transformed the way logistics companies function, considering increasing their scalability. Now, according to Cloud Element survey, firms who use APIs see a 50% gain in revenue owing to the increased integration. And if you talk about another aspect that we have is quick response codes, that is the QR codes, and they have been widely used for many years. I mean, we may have noticed them on tickets for events or restaurants to access digital menus. But nowadays, fleet managers are also now leveraging QR codes majorly for equipment tracking. So, how do you think that these QR based systems or API driven networks offer better scalability or traceability for fleet operators?
Yeah, no, absolutely. So start with APIs. So APIs provides businesses and the infrastructure for real-time, data transmission. It could be between their two existing systems, or it could be between vendors and merchants, or between shippers and their customers. And that is transformative, right? We take a lot of things for granted as a consumer, but we don't realize majority of business transactions are still dependent on phone calls, WhatsApp messages, emails, where you send Excel files, invoices, etc. API cuts out all the middle layer, and as a result, it obviously reduces transmission time, but it also reduces chances of delays, frauds, misunderstandings. APIs transfer structured data in real time between two systems, and that once we understand that, we can understand why it has a profound impact on the earning potential or the revenue of any business adopting that technology. Coming to QR, so QR is, I believe, we see a lot of QR in India and then Asia in general, and we haven't seen that kind of adoption here in the US. And it really confused me when I saw it. But you're right, QR gives businesses the ability to again extract dynamic data, which is very context rich in real time. It also reduces the cost, right? Traditionally, say before QR was used at UPI, one would have to print a plastic card, put a magnetic strip on it, and then the other side, the merchant would need to have a physical device that reads that data, then transmits it to a server. And it was an extremely expensive, cumbersome, and inefficient process, which we all took as norm. But the QR code created a secure, dynamic way of transmitting the same information between two existing smartphones. And that's what, we believe was the basis of the payments revolution that we saw in India. And of course, the same logic can be applied to different stuff, like you mentioned asset tracking here in the US, or any other way of, requirements where you want to transfer secure information in real time.
That's a really insightful breakdown, Shivam, and thank you for doing that. And it's really interesting to see how technology like the QR-based codes and API-driven systems are simplifying operations as well as empowering fleet managers with some strong data-backed decisions. And I think it truly highlights how digital connectivity is reshaping logistics efficiencies from ground up. Building on that point, I think in terms of modern payments and considering the logistics industry, I think historically this industry has relied on traditional banking systems for payments and collections. Of course, in recent years, with the COVID rising and international conflicts and other disruptions, I think the industry has been exposed to the limitations of the traditional banking systems and placed supply chains under intense scrutiny. Now, while the fast, error free movement of goods is very essential, the movement of money is often slower and more complex, like we discussed earlier in our discussion. So, all of this is kind of adding friction in an already challenging environment. So, how do you think that modern payment infrastructure can bridge the gap between shippers, transporters, and even financiers in a fragmented logistics ecosystem?
That's a fantastic question. So I'll take it in two parts, right? So first one, we could just build on top of my previous response on the APIs. The moment data transmits in real time, financial flows can be automated right behind it, right? So today, think about it. When a business is dealing with another business, say the payment terms are, I will pay you 7 days post delivery of the product. Traditional businesses, once the product is reached, the warehouse will call the head office, confirm delivery. Then the owner, the head office will call the shipper, asking for payment details, asking for invoices. And there's just a lot of manual reconciliation that goes through this process. And then, to that, the human element gets added, where people make mistakes, people, get sick, people are unavailable. And that just, when you compound that into 1,000, 10,000, 20,000 times that happens for these businesses every year, you can really start seeing the inefficiencies that build up in that whole process. Automated data transmission can create that layer for automated payment collections and disbursements. That's just the obvious next step to adopt in any technology in your business. One thing that maybe in relation to Piston that we learned, which I think is important to point out, when you swipe your card, when you swipe your Visa or MasterCard credit card at a merchant, you are actually transmitting the money and information via at the minimum 4 intermediaries before it gets to the merchant. And when it leaves your bank, it first goes to the Visa network. After the Visa network, it goes to your issuing bank, then goes to a payment processor that is probably in the middle, and then goes to the merchant's credit card processor. So there are 4 absolutely unnecessary, steps to money being moved. And what seems like a very modern and digital first payment method. And that means 4 people are running checks, 4 people are running fraud checks, 4 people are running, reconciliations, and 4 people have different expense structures that get baked into your transaction. So that slows down the money movement. That also slows down the data that can flow through. And that obviously adds unnecessary cost. And removing these middle layers in any transaction, whether it be a simple B2B transaction via APIs or you transact at the merchant via QR codes, that removes a lot of middle layer. And that inherently just brings out the efficiencies of that transaction.
Definitely. And I think when we talk about modern payment infrastructure, it isn't about transactions anymore. I think it's becoming this connective tissue that aligns all stakeholders in the logistics value chain. And it's empowering transparency, faster settlements, better digital credit access. And I think overall it is helping build trust and liquidity across the ecosystem. So I think while fleet operators today are grappling with increased complexity and fragmentation, they're also looking for payment solutions that simplify these operations. One last question for you, Shivam. How does the future of fleet and logistic payments look like to you?
That's a very, loaded question in its simplicity. But we believe at Piston that payments should be transparent. They should run in the background. Ideally, you don't wake up in the morning, think, excited to log into your fuel spend account, right? The idea is that if everything works the way it should be, if it works automatically, if the fraud prevention is accurate and data rich, if the payment rules are dynamic, it should be instant, it should be transparent, and it should be completely embedded. And that's the future we believe of payments in general. And obviously, we're starting with fleets and logistics. We believe cutting out the middle layer grossly improves the efficiency in the transaction. It allows communication to flow faster, which then, as a second order effect, facilitates reduction in cost of transmission and the instances of fraud. And that we believe is a future that we're very quickly running into, hopefully powered by Pistons.
Definitely. And I think when we're talking about modern digital payment infrastructure, which is much needed in today's era, it's not just reducing the administrative workload or, payment errors, but it's providing better visibility across all payments to strengthen the cash flow management. And I think by adopting an integrated account through providers like Piston, I think for logistics firms can synchronize their payments with speed and deal with the complexity of global supply chains, and reducing their overall reliance on the constraints of traditional banking systems. Well, thank you so much, Shivam, for taking out the time and effort to be on a podcast today and helping us understand that the fuel industry or the fleet industry is no longer just about the fuel and maintenance. It's more about mobility, data, and majorly payments working together. And as customer needs evolve and government regulations push for sustainability, fleet operators definitely require smarter and more adaptable payment solutions. Thank you so much, Shivam. It was lovely chatting with you.
Thank you so much. Thanks for having me.
Great. So, this is for our listeners. I hope you enjoyed today's discussion of our episode today. Don't forget to share it with your network and let us know what is something else you would like us to discuss in our next episode. Meanwhile, you can view all our previous podcasts on Spotify and leading platforms. Thank you so much.